Today we're going to be talking with Max May, who's one of the founders of National Storage Solutions. He's been working in self-storage space for over 10 years now, and it's all he does. He specializes in just this. So I'm excited to hear what he has to say about self-storage. All right, Max, thanks so much for hopping on the show. Excited to finally talk to you about self-storage.
Thank you for having me, Chad. I'm excited to be here and be able to shine a little bit of light on storage.
Yeah, well, you're the expert. I've gotten a chance to know you over the last couple of years through the real estate guys, and I've always admired it from afar because I really like the space. I know you've been in it for a while. So I was kind of hoping today maybe we could talk a little bit about your journey through self-storage, kind of how you got into it, because I know you've been in for a while now, and then kind of where the market stands today, because I know that's your specialty. So if it's all right with you, maybe start us from the beginning on how you first got into self-storage, and I think that was like 10 years ago or something, right?
Yep. So thank you for having me again. Kind of going back to when we started in storage was back in 2012. So when I originally got in, I got with a group of guys that had just purchased a storage facility as a passive investment, going to be 100% passive, had hired third-party management to come in and run the properties. I got with them on a medical business, on assisting with them. And we started sitting down and running the numbers, and the numbers for the storage properties had so much upside potential from the income and from the equity growth that we were seeing more potential in that than we were on the medical side. And that's when we kind of started brainstorming and wondering how we could take advantage of this. And we launched a third-party management company, brought it all in-house. And then we started growing the storage portfolio from that point. So we started back in 2012 and kind of slowly it started acquiring over the last 10 years.
Wow. And that was National Storage Solutions?
Yes. So we launched National Storage Solutions as the third-party management company. It's a full service third-party management company, provides human resources, general management, revenue management, accounting. So we had originally outsourced the third-party management, but we had saw that they were lacking some using a third party, and there's some areas that they were not succeeding on getting the accounting sides, on reporting, and then some of the revenue management side we were seeing lacking. So that's when we decided to kind of go down that avenue and get that launched to where we could ultimately control what our properties were doing, but also drive the revenue and the underlying value to create more equity and passive income for our investors.
Cool.
Oh yeah, it's all the mailbox money.
Yeah. So do you guys do management for other properties or just for your own properties?
We primarily do our own property management. We do offer third-party management to other individuals. We don't openly advertise for the third-party management, but if someone does approach us, we'll sit down with them, give them education on what we've seen in the market, some of the strengths and weaknesses, on some of the on what to look for in a third-party management, and then if we see it's a beneficial partnership, we will take it on a third-party management contract with them and manage the properties for them. It's not something we openly advertise, but we have third-party managed for people in the past and be able to bring some of our unique items on revenue management stuff to the table for them.
Okay, cool. And you're from Abilene, Texas, right?
Yes. So I grew up in a small town outside of Abilene. Currently live in Abilene, Texas now. So,
and do you guys buy are your properties in Texas or in other areas also?
We have properties spread throughout Texas, Oklahoma, Arkansas, and Missouri. So we have a couple of different states there. The majority of them, I'd say a little over half, are located in Texas, and then we kind of stretch up north a little ways to the Oklahoma, Arkansas, and Missouri markets.
Okay. And how big's the portfolio now?
We currently have 20 properties under the portfolio. We brand our primary brand for our storage facilities is Easy Stop Storage. That goes along with our National Storage Solutions. There's almost all of our properties are branded under one name. We had debated on if that was a good thing for many years, and then we finally took the jump and made a consistent branding across the board about 2 years ago.
Okay.
So
cool. So being an operator and investor that kind of that specializes in self-storage, how do you guys make like decisions on what to buy or what class you're looking at, what areas? What does that process look like?
it's changed a little bit over the years. So, I mean, from 10 years ago till today, it's kind of morphed into a different, some of the criteria has changed over that time. We primarily have always focused on secondary and tertiary markets, specifically those markets to be able to get those bit higher spreads on our yields, be able to drive the returns that we're looking for. When we originally started 10 years ago, primarily we were looking at our rate of returns and our cap rates that we're paying at. Today, fast forward 10 years, today we're looking at we're still looking at the return rate side, but we're not focusing as much on the cap rate side. We're looking at more of the underlying value of the real estate. So if you do have a market correction, which properties are going to be affected less by that market correction? So if you're buying, for instance, a property that used to 10 years ago, you could have purchased for somewhere in the ballpark of $80 a square foot, is now trading at $160 a foot. And there's a lot of room there to kind of come back down to where the construction cost. So we're looking at the underlying real estate value on seeing which ones are going to, if we do have a little bit of corrections, getting closer to that construction cost as possible, or not going to that top tier dollar per foot price mark.
Gotcha. And are you guys do ground up construction as well, or just buy stabilized deals?
Primarily, everything we've done in the past has all been through acquisitions. We're currently looking at possibly doing some development. There's been the market's changed a little bit in the development side because of having the interest rates changing and the material shortages over the last 2 years. So you're seeing a delay in some of the rental rates compared to the cost to build. So right now you're seeing a little lag in some of the development. So, but it is an area that we are looking at.
Yeah. And do you guys typically buy and hold, or you're doing a shorter term, like 5-year holds? What do you guys do?
Typically, we're looking at buy and hold. We'll do refis throughout that period. We'll start evaluating them about year 2 on refis to target mark at about year 3. See them on doing a refi cash out, get some of that equity back out, return capital to the investors, and then past that, we're looking at year 5 additional for that, and then going out from that, just kind of seeing what the market holds. But primarily buy and hold. But depending on what the market is at the time, those at the big intersections, but looking at more of a refi structure to where we don't have the tax events.
Yeah. And in general, the investors stay on board. They don't get out or exit. They stay on board long term as well.
Yep. Yes, sir. All the ones that we have done up to this point, everybody's kind of came into an understanding that we're looking at long term for generating cash flow and getting equity out via refis versus sales. We have looked at a few times on, hey, is it beneficial now to sell, or what our value is going to be doing in the future? But when we start looking at that and trying to distribute capital and where speaking to the members and the investors on what you do with that capital once it is distributed, with seeing it beneficial to maintain the assets and go with the refi model.
Yeah. Yeah, that makes sense. So early on, you'd mentioned that you got out of medical and into self-storage. So it doesn't seem like you're too adverse to changing, but you stayed in self-storage this whole time and continue to do so. So maybe some questions like on what attracts you to self-storage, what's kept you there. You didn't mind changing in the past, but you haven't been changing anytime recently, right? You're just staying with self-storage. So maybe like some of the general pros that really keep you in the business. How would you explain those?
Yeah. I think, always open for looking at different things, but the storage I've always came back to it. When you get the shiny object syndrome sometimes, and you see something and go explore it a little bit, but I've always drifted back and just maintained a focus on storage, primarily just from the asset class itself, on seeing the underlying fundamentals on why storage is so great. I mean, going into an economic market that we're looking at like right now, there's quite a few benefits for storage in that regards. As you storage is benefits in a up market and in a down market. So you have people that are, while you have limited disposable income, they're moving into self-storage units when they're downsizing. And when you're on the upside market, you have people that are buying new toys, building new homes. And so they need somewhere to store that, or while they're building their home, they need somewhere to store their items. So you kind of gets best of both worlds in that regards for a fairly secure investment historically. And then looking at one of the things I love about storage is being able to drive the revenue. There's lots of different revenue sources that you can derive from it. If that's money, obviously you got your monthly rental income, but then also adding on your tenant protection plans or your tenant insurance, adding on U-Haul, and then adding on your ancillary revenue. And then there's several other products that you can add on to kind of help drive some of that monthly revenue that you're receiving. And then everything's a month-to-month lease. So you're able to drive that revenue from month to month. So if you fill up, you can send with a 30-day notice, you can increase rent rates. And so you can hit that optimal rental rate and that optimal occupancy that you're aiming for. And that's what I think is one of the great benefits, especially going into inflationary times. You have that monthly rate increase. So you aren't stuck into a rate for a year. You're able to send out that monthly rate increase. And as say, if you ever hit into a hyperinflationary situation, hopefully that never does happen or anything, but essentially with storage, you could send out monthly rate increases as that happened. But I mean, I don't foresee that coming to that point, but that is kind of a cool element. And then once you put all that together, driving your value of your facility at the end of the day. I mean, as you increase your revenue, you're increasing your facility value by a multiple. So that's kind of really cool. And what I see in storage is having such flexibility and opportunity with the income side, and then it drives that equity and that value of the property.
Yeah, I love it. And at CSQ, we do a lot of multifamily stuff. You'll probably be proud to hear that I do invest in self-storage also. I did a property in North Carolina, which we invested in. Haven't done an active deal yet, although hoping to bring that to my investors sometime soon. But I've been a big proponent of self-storage. And one of the big things that we haven't talked about was eviction. And, I've got a lot of experience in that regard. Most of it, if not all of it, negative experience dealing with evictions. But like for you, that's a totally different animal, right?
Yep. So with the eviction process, being in the multifamily said, you understand the frustrations you can have, especially like during COVID, when the government steps in and says, hey, you can't evict anybody anymore. Yep. And being the self-storage during COVID, we never had government interference. in saying, hey, no more evictions or anything. There was we did all of our properties. We ended up putting on just a voluntary hold on the evictions during the initial process, getting everything figured out, what's going on and what's going on in the world. And you saw several other industry leaders and companies doing the same thing. But from an eviction standpoint, for self-storage, you can have, depending on what state you're in. I mean, for example, state of Texas, if someone doesn't pay on the first, you can have them have that unit cleaned out within 30 days, but through the legal process. I mean, you move very quickly within a couple of weeks, several weeks. You can have someone that have that person out of that unit if you needed to. So it's very flexible. Across you don't have a whole lot of government or interference within the storage across the board. And then being able to give you flexibility if for some reason you have a tenant that's a troublemaker or something along those lines, our leases state that you can accelerate that process and giving them a 15-day notice, or even if there's some circumstances that you can go to a 3-day notice. Mm-hmm. But there's a lot of flexibility when it comes to the eviction process.
Man, that's another reason why I love self-storage. We're still dealing with the eviction moratorium over here in LA. It's crazy.
Is it still going on? And
yeah, here we are filming in July 2022, and yeah, we have an eviction moratorium until 2023. I think we're the only state in the only city in the whole country that's got to do that right now. But it's a bit challenging. What about, you mentioned, like, along the lines of evictions and having to move people out from time to time, any cool like storage wars type stories that you have?
There's some interesting ones. They aren't quite made for TV, but we've had a few things there's some interesting stories on the days of auctions. You have good, I mean, it's, to an extent, you'll have it like a group of people show up when you're doing a live auction. I mean, it's similar to storage wars. It doesn't get quite as exciting, but we have had people where they get very emotionally involved in the auction and had to have called police out to have them. They got upset that they didn't win the unit or this or that, and have the police out to calm people down. Doing them online versus doing them in person, you don't have the liability risk of having 20, 30, 40 people on your facility throughout the day. And then your exposure rate to potential buyers, you might have only, if you're in a smaller town you might have only attracted people that live within a 20-mile radius or 30-mile radius to that auction. Online, we see people driving 2-3 hours to come pick up a storage unit. So it does help kind of drive that revenue and open up your pool to where you can get some more buyers to bid on those units.
All right. Well, we'll save those stories for the Be Real. I got to hear some of those stories offline, but it's interesting. We all have war stories, right? Like I was just telling you before we started filming this, my own war story I'm going through right now, and it's interesting because I mean, real estate's a great space to be in. A lot of money to be made, tax advantages, leverage, all very positive. But there are negatives, there are downfalls. And challenges certainly along the way. And I'm sure you guys, as you've been growing your business, you've hit your fair share of challenges also. So definitely don't want to mislead people that it's all, all glitter and gold, but there's definitely some challenges that we deal with on our own.
Oh yeah. Everybody always talks about with storage, you don't have the running toilets and stuff like you do in multifamily. But on the flip side, on a multifamily project, you might have 80 tenants. On a storage facility that is equivalent value and size, you're going to have 800 tenants. So there's some give and take on both sides, and so it's kind of always makes things interesting on those stories.
Well, speaking of interesting things and hurdles, how is like the current interest rate market and real estate market? How's that been affecting you guys, maybe in terms of either your operations or in terms of your acquisitions?
I was from the acquisition side. It has got very interesting. We've seen talking to quite a few of the different brokers in the industry, looking at properties actively, going after properties currently. There's a lot of properties that are sellers and buyers are in turmoil right now because of interest rates changing and going up so much. You've seen a lot of properties being retraded. It's tightened up our belt up on the acquisition side. We saw some of it, saw some of the stuff coming. So we had cinched up the belt per se, quite a bit already, but as it keeps on going, we kind of have to make sure we're underwriting conservatively to where if something does change in that form, where you have interest rates go up by 3/4 a point or what it looks like is going to be a point, we're underwriting to that and not getting caught off guard and having cash flow issues or debt service issues.
Yeah. Do you guys typically put on like a standard commercial loan debt, or is it something special for self-storage?
It's mostly is commercial loan debt. We're looking at 5-year rate locks with adjustments after 5 years. Some for the most part, we have done a little bit experience in the CMBS markets, and then looking at doing stuff with some of the insurance companies, but primarily doing your traditional commercial debt. But it's so as rates go up, looking at some of these different loan products that they offer, there's been some of the like pros and cons on it, for like the CMBS loans on locking up the debt for so long to where it makes it a little bit harder to extract that equity out of your property. And then, so that's one of the reasons we kind of lean towards more of the traditional debt to allow us to be able to extract that equity as it grows, as equity happens.
Yeah, there you go. So what about, you also have another company, M3 Equity. What's the difference between that and NSS?
Yes. So the M3 Equity Group is our syndication company, and that's where we're finding deals, putting deals together, and syndicating them, grouping the investors together, putting the investment together for to put out to our investment pool. And then the National Storage Solutions, like we were talking about a little bit earlier, is the third-party management that we take and manages the properties that we acquire through the equity group.
Got it. Okay. And for the M3 Equity, is that raises for the properties that you guys are buying for the self-storage properties?
Yes. So that's the one that's raising for the actual properties, the general partner in the property raises.
Got it. All right. That's good. That's good. And on the partner side, you have some other partners that you work with in these groups also?
Mm-hmm. Yes. So over the 10-year period, I have when originally 10 years ago, when we're starting out, I was with the group of guys, still work very closely together, still participate and do everything with each other. I was participating as a limited partner, running the management company side of it, doing all the acquisitions, underwriting, pretty much everything besides the money raising being the GP side. And over the years, I've transitioned over to the GP side, and the same group of guys. We all still work together. I've moved from the inactive or the non-raising capital side to the capital raising side, but maintaining the same relations, still maintaining relations and doing everything with National Storage Solutions, running the operations on that side of it, and then bringing in the current investor group that we had grown. That's good. I love hearing that. Maybe one day CSQ Properties will hop on board and partner with you guys. I've been following you guys for a while. I love self-storage.
One more question I was going to ask you before we start wrapping up was on the technology side, because it seems like there's a lot of technology that you're able to implement or add on, as you mentioned earlier, to the properties. What does that look like over the last 10 years? How has that changed from the operational standpoint and running the self-storage properties?
Yeah. So look, technology with 10 years ago, storage was very in its infancy, or it was there, but it had never been really focused on. And over the years, you've had new technologies roll out, from online rentals to where someone can get online, and it's essentially, if you don't even have to have a kiosk at your locations anymore. You can have direct someone to your website. They can rent fully online. It generates their gate code, and they're able to go plug their gate code in, move into that unit that they just rented without talking to a single individual. All online, does fully executed documents. Then also there's lots of development going into the kiosk side of that, to where if someone doesn't necessarily have a smartphone to be able to utilize your website or something, or shows up on site, there's a lot of technology going to the kiosk side of things right now. Also, there's still some hiccups in I'd say the full automated side, but it's especially during COVID, that got a lot of things kind of got moved forward on the autonomous unmanned facilities. That's an area that we had tried to, I wouldn't say pioneer, but we tried about 7 to 7 years, about 2 years stint of doing unmanned facilities. We went about 7 years to about 5 years ago. And with secondary, tertiary markets, it was a little bit slower to get developed and for people to have an adoption rate. But as of today, I see that adoption rate picking up, and that's an area that we're going to be having more of a centralized focus on, is getting more autonomy and automation through those facilities. Then you have the revenue management side that's developed quite a bit on dynamic revenue management, to where you might have multiple 10 by 10 units on your property, and then you can charge depending on, hey, this one's for instance, a climate control building, you can charge different prices for those 10 by 10s throughout the property. So ones that's closer to the entrance door, to where you don't have to carry your stuff down a hallway, that's a premium. That should be a premium unit. So now we're charging higher premiums for different locations on units throughout a property. So having that dynamic pricing, and then as units fill up, occupancy fills up, prices change real time, to where if you rent 2 or 3 units in a day, that price is going to go up, to where you always want to make sure you have an empty unit at the end of the day. So you've seen a lot of revenue management and autonomy or automation technologies coming out in the last several years. And that's one thing we're actively kind of talking to a provider right now on creating smart units. And they'll allow the tenant will actually get text messages and notifications when someone accesses their unit. So if it detects movement inside a unit, they get a text message that says, was this you that blah, blah, access the unit? Yes, no. If it's no, we receive notification that we need to address an issue possibly on the property. And then, so there's a lot of new technologies in that regard, that increasing security, autonomy, and then the revenue management.
Yeah, I love it. I mean, that dynamic pricing sounds a lot like what the airlines do, right? I mean, even for a particular flight, the price changes every day and depending on demand, but then also the seats, right? You look at your seat chart, and if you want something toward the front or more leg room and all that stuff, it seems like a very similar model as what you guys are developing in your industry.
Yeah, that's very, very similar. And then that person that's sitting next to you didn't pay the same price that you're paying. So it's always changing. If for some reason a flight isn't getting full, you might see some discounting on some of those different seats. So it's an actively moving pricing system.
Yeah, I love it. Well, you already know I'm a huge supporter of self-storage, looking to get a lot more into it with CSQ Properties. if there's investors that want to get in touch with you guys that are interested in investing, maybe through M3, what's the best way to get a hold of you guys?
Yeah, you can shoot me an email at nssmanagement.com, or you can feel free to reach out to me on my cell phone. It's 325-721-9418.
Cool. Yeah, we'll put both that in the show notes too, so people know in case they want to get into it. I mean, it's a very active space. I totally agree with you. It's recession resistant, and whichever way the economy is going, self-storage is booming. And if you looked at those trend lines over the years at the amount of self-storage space that's been created in the US, I mean, it's mind-boggling, and U.S. is actually at the forefront of that, right? U.S. is leading the charge in terms of self-storage. So I love the idea. We'll hook up investors if they're interested in reaching out to you guys and investing in one of your deals, and appreciate you taking the time to talk with us.
Yeah, I appreciate you allowing me to jump on here and talk to you a little bit. And it's been, I mean, I love what you're doing, and want to see what we can do together.
Yeah. Awesome. All right. Well, thanks, Max.
Thank you. Thank you, Chad.
Great insight from Max May, who's been doing self-storage for 10 years and has 20 properties in his portfolio right now. If you'd like to learn more about him, please reach out to the internet address below. And if you'd like to hear about what CSQ Properties is doing, you can reach out to us as well. Thanks so much for watching.